as you pointed out, it's more about the strategy than the second quarter results. But just a few, high points from the results. So remember, they are the largest broadband provider in the United States. They have about a 25% share of the market, but that share has been rapidly declining. And we continue to see that in the numbers today. So they again lost broadband subscribers. And really, I think what investors are focused on, Paul, is that, this story is not getting any better. So over the past 4 years, we've seen intense competition from the telecoms, both on the fixed wireless side as well as fiber. And then now this year, you have this new competition with Starlink. Just with kind of the expansion in V3 satellites next year, the expansion in broadband capacity, there is so much fear on the street that Starlink is going to become another big competitor for cable. And so just the story doesn't get any better. Now, Comcast, what they've done is they have altered their go-to-market strategy by becoming much more competitive in terms of broadband pricing. But that obviously has resulted in EBITDA getting crushed. And so we saw it again fall about 6% this quarter. Again, they're pointing to the story getting slightly better in the second half. But again, it's a little bit of a wait and watch. Longer term, I just don't think investors are optimistic about this cable broadband turnaround at all.
Okay, so it's kind of like managing the decline of its business right now, its main business. Is the company offering up any kind of growth story for investors to get excited about?
Yeah, I'm glad you asked that. Actually, they did that just 3 weeks ago, Scarlett. So, they are an interesting company because they're a vertically integrated media company. So, of course, broadband makes up 85% of their EBITDA, but they do have a great media business with NBC. And they announced plans just a few weeks ago to actually separate out that media business, which is, the NBC Universal business, along with Sky, into a separate company, which is supposed to happen sometime next year. Now, the whole story here has been that with the whole Warner Brothers bidding war, media assets have actually they're actually being really played up. And if you look at Comcast NBC, for instance, just the collection of assets, it's a stellar collection of assets, and it almost resembles a Disney, if you will, because they are one of the few media companies that actually has theme parks very similar to Disney, has studio, has a broadcast network, had some cable networks, and has Peacock, the streaming platform. And so the big argument here was, cable multiples have actually declined. They've halved. So they've gone from 10 times EBITDA just about 3-4 years ago to 5 times. Ooh. And NBC, because it's being clubbed with Comcast, is suffering here. And so if you look at Disney, for instance, Disney trades at about 9-10 times. And so the question was, why are we punishing NBC for, cable's poor performance? So I think investors definitely are happy about that because it now kind of shines NBC in this new light, and it definitely gives them some strategic optionality as well.